Tell us more about what's been making headlines in finance and economic news. This week we're talking with Suzanne Haddan, Managing Director of BFG Financial Services. Thanks for coming in, Suzanne.
Good morning.
The escalating trade tensions, it doesn't seem to be bothering the markets that much.
I think the issue is that people can't quite believe Trump will do what he's saying he will do. But so far he's already put tariffs on 34 billion, another 16 billion, and talking 200 billion. UBS had a look at it and suggested that if Trump does what he's saying he's going to do, that could have a massive effect on global economies. For example, just in the Australian share market, we potentially could see a drop in our share market of almost 20%.
Wow.
But he is true to his word. He is the disruptor. And he said this is what he wanted to do, is to throw the tariffs on. But it's a question, of course, it's now reached that point where it's essentially a trade or a tariff war, isn't it?
And Andrew, that's the frightening part. It's always frightening when a politician actually does what they said they were going to do in an election. And so that's why we're seeing in our circles that while the public sentiment might still be, this couldn't possibly happen, and everyone knows how bad that is for the world, for GDP and our standard of living, surely someone wouldn't do that. We believe there is an increasing risk that it is going to happen.
If this continues to escalate, could the US economy and US jobs be the biggest loser?
And that's the other interesting point, that analysis suggests the two protagonists are the ones that will suffer the most. GDP dropping by over 2%, unemployment going up and inflation going up. But maybe the issue is that not everyone benefits from global economic improvement. And I think President Trump is playing to certain sectors of his voting base, which bringing the jobs back on to US soil, even if the standard of living drops, will be seen as a positive for them. It's very insular. He sees it that we win and we lose. There's winners and losers. Actually, it seems to be all losers.
Well, I could see that reversal of fortune, which of course have an impact on us here, as we've spoken about, and specifically how it affects consumers with interest rates and so on, how the economy is travelling. Interesting that I saw earlier this week some commentary saying there may yet be another rate cut before we see a rate rise, which may be as far as 2020 or beyond.
The issue is what we spoke about before, the out-of-cycle interest rate increases. We won't name and shame, but there's been multiple financial institutions increase their home loan rates in the last couple of weeks, some as high as 0.6%, which can have thousands of dollars impact on you repaying your mortgage. What levers does the Reserve Bank have left? They're at 1.5.
And this is why we're seeing signs that the property market is not only stalling, it's actually falling.
And that links into with APRA saying our banks are in great shape, and even when they do stress testing, assuming 35% drop in property prices, doubling of unemployment, collapsing commodity prices, they assure us the banks will still be okay. But I was reflecting, what about the rest of us? A 35% drop in prices in property plus an increase in interest rates will put massive numbers of people, predicted to now be almost 1 million people, could be mortgage stress.
Especially those who potentially got into the market in the last, say, 5 years, who would be already under an incredible amount of debt stress.
And that's important, Johanna, because the banks were a bit more freewheeling with their lending. And so there are particularly some young people who have borrowed up to their eyeballs for their debt, and they must be saying, well, thanks for encouraging us to get into the market. Look at where you've put us now. The other issue is these interest-only loans that were very prevalent before the APRA started reducing what banks could do in that space. They come off interest-only, and you have to pay more when you're paying your principal and your interest. Again, $7,000, $10,000 more dollars a year borrowers would have to find.
So, Suzanne, did you find that surprising then when you had that comment from APRA's chief midweek, essentially saying we've done the heavy lifting here to protect the banks from defaulting in those times of crisis? How did you interpret his comments?
Well, I think his comments were correct,
Yeah.
but I was reflecting, it looks like we need to get out our weights because we'll be doing some lifting as well. So his job is to
But that's
protect...
fair enough, isn't it? That obviously a consumer, anyone that takes out a mortgage has a responsibility to be financially prudent as far as their own finances are concerned.
And that, as a high-level comment, you're correct, but you have to delve into not everyone borrows sensibly. Not everyone pays off their credit card when they're supposed to. And the issue for those people is if interest rates go up, which they've started to, how are they going to cope, coupled with a property price drop? They need to start trying to put a little bit of extra money in their debt. The other thing I found interesting is we've seen a reduction in people fixing their interest rates. And my view on fixing interest rates, if you can't afford to cope with a rate rise, consider fixing at least part of your loan to protect yourself.
But does it not come back to haunt you? Say you've got a fixed term of 3 years. At the end of those 3 years, rates have risen, for instance, and then you hit hard.
Big jump.
It's a bit of a shock.
You are hit hard, but at least it gives you 3 years to try and get your act in order, to try and do some budgeting. Generally, you don't win with fixing rates, the banks win, but you fix it for risk management.
Now, we also had a warning this week about the tax office targeting ordinary Australians, asking for a friend, of course. What will they be looking at?
Well, the issue is that apparently we shouldn't just be looking at Amazon and Google for recouping tax. It's got to be Elaine and Jeff around the corner. And we don't want it to be a national pastime, fudging your financials. And we spoke about the app I'm sure you've engaged, the ATO My Deduction app. Get it out and start entering and taking a copy of your receipts. The tax office has said $8.7 billion in lost revenue in the
It's huge, isn't it?
Well, it's
Amazing.
3 times what apparently we lost through the multinationals. And what are we telling porky pies on purpose, or are we making mistakes on our tax? And that's where I think you need some help with something like the app.
Okay, and just quickly, because we were talking about this earlier too, if the ATO will benchmark you against others, peers in your profession. So if you're way above the average, that'll put up a red flag.
Don't attract attention.
Yeah.
Clients sometimes say to me concerningly, well, how will they know? And I say that's not the point. But the other point is they will benchmark you against people in similar jobs to see if you're way out of the claiming regime.
Good to be aware of. Thanks for that, Suzanne.
No problem.